Okay. Did you think a Black Friday would lead to a red Monday? Wednesday's gains, gone. Friday's gains, gone. Where are the bulls? They're not in Bitcoin. Is Bitcoin the catalyst for the market coming down? Is it the hawkish BOJ ready to raise rates? Is everyone worried about earnings coming up this week from some big cloud participants? We'll talk to Mark Chaikin about that when he joins us on the show. Not much in ratings lands. They're kind of worried about what's going on. We're in the red, folks. Let's figure out how to get into the green. I am going to add my charts to the stage, and we're down 50 handles just off the lows of the session at 68.02. 68.10.75, your last print. Good day to spoos are working today. The buck is in the red, down 29 cents, 99.12. TLT in the red, big with that rate cut coming at 89.37. One bright spot and two bright spots in the market. One is oil. The value stocks up 38 cents, 71.45. GLD having a good day, up $1.80, 389.90. And SLV, there it is, up 1.43%, just under 52. Bitcoin dragging us down, folks. Bitcoin down 6%, $5,390. But if you want a bright spot, the bright spot is it's off the low of the move. So let's start the two-man show right here for the next 2.5 weeks. I think I'm going to call it a 1.5-man show because I'm feeling great. I'm strong. I'm ready to go.
I know. I'm kind of weak and still nasally and still fighting COVID. I'm gone. I got booted off. Oh, Joel brought me back. He just wanted to kick me off for a second. So, yeah. So here we are. The weekend trade did not work this weekend thanks to Bitcoin. We'll blame Bitcoin for the market sell-off, and I think it can easily be said here, Joel, because if we do bring those charts back up. The futures, I believe, opened green, did they not? 6 p.m.?
Oh, yeah. Yep.
Bring the futures up. Like if you think Bitcoin can't lead the futures, this is the day to prove you wrong. Because the futures opened at 6 o'clock, and we were quite strong. We were looking like, oh, it's going to be a good weekend again. So S&P futures were up how much, Joel?
We were up about 5-6 points. I mean, I'm going to call for the 100th double top, that I call in the markets. Yeah, we were green. I saw it green. There's 15-minute charts, 2 charts. We got to change this one to the S&Ps real quickly.
Sure.
Make this one the S&Ps, and let's look at the correlation here.
Yeah. Well, you have 2 S&Ps up there now.
Wait, I did. I changed. Okay, so I'm
like, that's really correlated, Joel. I'm like, those charts look identical.
Oh, come on.
Okay, we got to talk Trade Station. Joel's got to figure out how to do all this. Obviously, we could do. He's got a link because he got the charts linked together. That's the problem. You got to break the linkage to do that. Right, so you break the linkage, then you can put them both up there. But what we will say is Bitcoin started selling off. What time was the Bitcoin started selling off, Joel?
Bitcoin started selling off.
Like
the real decline started just after the open, like after around 7 o'clock.
Yeah, 7 o'clock. So about an hour before the Robinhood open on equities, about an hour after the futures open. And when Bitcoin started to go down, the market started to really get hit hard. So when Bitcoin started to go down, obviously that's when, the S&P futures really started to get hit. And with Bitcoin falling, how much did we fall? About $5,000 in about 50 minutes or something. It was a pretty good fall.
Was it that swift here?
It was pretty fast.
Yeah,
It was pretty violent.
Yep. If you go from that 7 o'clock, we closed the 7 o'clock bracket at 91,000. And it took a little bit. It took a few hours. We were at 80. Well, no, pretty quickly. We were at 87,500 in 2 hours.
Yeah. Yeah. So that's the reason for the sell-off. So if you're still looking, why, definitely Bitcoin is the reason. Let's just talk. This has been kind of the elephant in the room. Like, this has been the issue here for a while with this markets. We've been talking about, yeah, you know, the S&Ps have come back nicely, the Qs have come back nicely, mega cap has come back nicely, but crypto really has been underperforming, still well under the 200-day. You know, we bounced a bit last week, but it felt like a reluctant bounce. It wasn't like people buying crypto hand over fist. And now all of a sudden, a day like this happens again out of the blue. And I heard that, you know, I was on my Twitter looking, and the crypto, you know, the crypto people are coming and saying, why? Why is this happening again? They're like, you know, scratching their heads here now because they're expecting, you know, the crypto to go back to all-time highs because that's what Bitcoin always does. Well, it's not the case. It's still in a downtrend here. It's still ugly. There's still non-believers here happening. Here are people who are just literally taking profits because it's been an incredible run here for Bitcoin for a while. So I don't think, I do believe that this is an issue for the stock market, and it's not separate. These are risk assets, and a lot of the same people who own Bitcoin own a lot of those momentum names, and that's what's getting hit the hardest here today. So if we do move it to equities here, the stocks that are the momentum names, the AI names, those are getting hit the hardest. You know, that love, you know, retail, you know, they go into social media and they got to talk about all these stocks. Those are the ones that are getting hit the most. I mean, IREN, we can bring up that one. Data center play here, obviously. Stock, you know, was $76 3 weeks ago at November the 5th. I guess it was a month ago. Sold all the way down to $39. So that's basically a 2-for-1 stock split. You know, 50%. Significant sell-off. Often, you know, you do see a bounce eventually where, you know, the S&Ps have bounced tremendously, Qs have bounced tremendously. I would say the IREN was more of a reluctant bounce. Yes, it bounced, but it wasn't bouncing like, you know, with that high beta, you know, like we're back. And now all of a sudden, boom, you know, 2 days, a little bit of a reversal on Friday from where it was opened into the close. And then, you know, you're down another 6%. Now you're just talking about, well, we're not that far from the lows again. So this is kind of the story in momentum land right now. I mean, Palantir, the huge pop, obviously, October, new highs, 207. They did the earnings and, you know, was just crowded alongside, bar too high, whatever you want to say, sold off, bounced back, but then it's been selling off and selling off and selling off. And now, you know, we kind of bounce a little bit, you know, the last couple of weeks been a good bounce, not bad, but, you know, here we are, we're down again here. So I think there's just heavier selling pressure in a lot of the same crowded names that own crypto. These same investors that own crypto. And if you're under pressure and losing a lot of money in crypto, what do? You probably raise cash and other things. And they own some of these other stocks.
You know, I really like Louis Sykes from Homie Charts. He was on Friday.
Awesome.
He is awesome because, you know, when you talk to a lot of these Bitcoin people, and we have, you know, so many of them don't look both ways. I mean, you know, I think Jeremy Newsom does, but he was very, 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 you know, candid on Friday when he was talking about Bitcoin. And he was not convinced that rally, because it had a nice rally off the low. What did we make a low in Bitcoin? We made a low. This is basis the futures. If you guys are new to the show, I show the futures charts. I mean, we had a substantial rally from 81,100 up to 94,000. We had a 13,000 point rally. And that was not enough to convince him that things have turned. And now you're giving it. So we could always do a quick retracement here. 13,000 point move, you know, 6.5, 87, 88. We already gave halfway back of that move. So it affects a lot of stocks too. I just want to look at these stocks, just a few of these stocks, run through them. There you go. MSTR, take and consolidate, really couldn't get away from the low of the move,
Right back down to it.
Yeah. Boom. Just like that. What double bottom at 166.
Coinbase, bang, right back down, not far from the lows here too. Obviously, these stocks are very much we know all the miners. The miners have all been ugly. You know, again, Mara down from $23 down to 11. You know, Hive's come way off the highs, Riot. You know, anything to do with crypto has been pretty ugly here in the last, you know, month. And yeah, we had a nice snapback rally here in the last few days, but we're right back down to those lows. But you want to know why, you know, like a bigger issue for this market may not be, like crypto. It might just be the fact that this market is exhausted with a lot of headlines that they were really rallying on before. And we talked about this. Brent was in the room, obviously talking about this as well, where you're seeing AI headlines come out. And, the market is reluctant. It's not rallying like it was on these headlines before, where we see an OpenAI headline and the stocks are not going up. They were going up 20, 30% on these headlines before. Now they're up like 3% or 4%, not holding them. So it's difficult for the market when it's not responding to the same positive catalyst it was before. It's telling you bears are more in control. And that still remains the same. Even despite the last rally for the few weeks, bears still have a case in a lot of stocks here. Case in point here. Let's look at this headline from this morning. You've got Yorkville SPAC, MCGA, files for an S4 business combination with Trump Media, DJT, with Crypto.com. This headline 6 months ago would have DJT up 50%. This headline 6 months ago. Look where DJT is off this. Down. They don't even care. Crypto.com. We don't care about any Crypto.com right now. We hate crypto right now. So worst timing press release for the Trumpster here and Trump Media to be doing a business combination with MCGA. MCGA not even move at all. The SPACs were all moving on these things before. There isn't even a trade on MCGA. Like, that's how little of interest here. Look at MCGA. It's traded 300 shares. They didn't even trade on it. There is no interest in this stuff here right now. So, I mean, that's telling you we're just not in Kansas anymore. Crypto headline, that's not popping your stock anymore. OpenAI comes out with something cool, it's probably not popping your stock anymore. So when you don't have that headline pops that has been driving this bull market for the last 6 months, it's a problem for the bulls. So we can look at charts, we can say, oh, the technicals are this, the technicals are that. But what drives the technicals? It's headlines. It makes price happen. That's why on this show, we combine it all. We do the technical approach along with, we've got Brent Stern, who obviously breaks headlines, and we try to put all the pieces of the puzzle together. We don't use one little piece to put the piece of the puzzle together. We use all the pieces. The pieces are telling us right now that the headline-driven market that has been for the last 6 months has cooled off substantially and almost to a point of no interest. No pop on DJT, no pop on MCGA on a Crypto.com headline is not good news for the bulls.
Yeah, I mean, you talk about positive catalysts and a stock not going up. You talk about a negative catalyst and a stock not going down. I mean, this is a clear example of positive news for MCGA, stock not going up,
The stock
and
not
what's
moving,
the
don't
catalyst?
care.
Not even moving.
Not even one buyer. Not one buyer in the
Get in there,
entire
Dennis.
world.
Get in there and show them who's boss.
No, just throw money away. I mean, DJT, no interest at all. Look at DJT. I mean, this was a $10. Wasn't this a SPAC originally?
Yes.
It did bounce at the SPAC level, $10.
Yes.
But I mean, here we were, $10 to $175, and we're right back at 10. I mean, this is the Trumpster stock. Like, he pumps like nobody's business, but he can't pump his own stock. It's not responding.
Should we go in? I know this is not part of our regular scheduled programming, but should we do the $10 level in SPACs? Do you want to cover that?
This is what we've been saying in the room, is the 10s are good to bounce off of, usually the first time they get back to 10. But when they breach 10, get the hell out. When they breach 10, party over. Like, danger, Will Robinson. You do not want to see your SPACs that are de-SPACed, the ones that obviously are still holding pre-SPAC, hold that because you get your cash back. Once they're de-SPACed, you do not want to be in stocks that breach the 10. MKLR was one, obviously. There's been a lot of these, but the one I was just thinking of was Webull. Forever holding 10. Forever holding 10. Forever holding 10. It breached in the last couple of weeks here. Now you're getting back up towards there. Yeah, maybe there's a company, maybe there's something here, but it just seems psychological. These things get under 10, everybody's all of a sudden losing, they're big levels for these stocks. So what I would say is the most is when you are trading SPACs or stocks that have de-SPACed, is the 10 level is so important. And when they breach it, you do not want to be long. So sometimes they bounce, sometimes they run off it. Sometimes, those 10s hold really nicely. Other times they come back down, they test it, and they bounce off it. Another one, was Rivian a SPAC? I don't think so.
No,
I don't know. It wasn't. That was an IPO.
Yep.
That's just a big 10 level. But I mean, support is support until it's broken. The 10s for the SPACs.
I mean, this had NKLR. I mean, Dennis, you hawked that thing for how many weeks and months and everything. And
we were in this one, and it was really good for a long time. And then it de-SPACed and went from 10 to 21 in 6 days. It was really good. I sold 19.5 in the STN room live, 17.5, and then I was like, I'm going to hold a piece. I held the piece all the way down to $9. I was like, this story's over. I just got to get out of the last piece. Like, moral of the story is don't hold a piece. Moral of the story is when you feel like you got the out, get the hell out. So, but what happened in NKLR was, again, the end of the momentum trade in Oklo. When Oklo started rolling over and Oklo got really ugly and it was the leader of the group, it was probably over for this one. You can't have, the leader of the group, Oklo, going from $190 down to $80. So that's what happened. But there's so many stories of these SPACs the same. And, Eric Krull, who comes on this show, every other month, who's fantastic, knows IPOs very well. He's the one that told us that. He's like, you got to watch the SPACs. And, when they start breaching, through, the 10s, and it's trouble. It's the same thing with an IPO. Like when it starts breaching through its IPO level, the stock's got problems because those things get defended. So lots of considerations when you're trading this kind of stuff. But
are they hard to borrow, though?
Evidence?
Like if you want to short it going through 10, are they hard? I'm just curious. Are they hard to borrow or not?
I don't think so. Some of them aren't. Some of them are, some of them aren't. But that's not a bad play, though, Joel. Shorting them through the 10 when they do breach it. So, I mean, the stock market works two ways, folks. I know so many people are biased long. And if you're a long-term investor, I don't think you have any business shorting stocks in your long-term account. I do not short stocks in my retirement account. I'm not trying to retire by shorting stocks. If you're trying to bet on the short side in your retirement account, you're probably not going to retire.
Timing.
You're probably not going to retire. Shorting is for trading, not for investing. So when you're investing in short ETFs, I think you're asking in the long run to lose money. All shorts are short-lived trades for the most part, unless you get lucky and pick your Enrons and your WorldComs and you're back, in certain times. That it's hard to invest on the short side of companies because most of the time, a lot of stocks do come back. Most of the time, the stock market does go higher. But as a trade, I mean, you can do anything. That's what gives you the power as a trader. You've got to be able to go both ways. I mean, if you can't short stocks, how do you make money? Like I didn't have a great November, but I just posted, I think I was up 1.81%. But I mean, the markets were down most of November here. So if I'm a long-only trader, I'm going to have a very difficult time making money in November. But
it was a weird November.
It was a weird month. It could have been really ugly for the S&Ps, and then it bounced back.
Yeah.
So it actually ended up not being that bad of a month.
I know.
For the overall market because of the huge
closing. Yep, on a closing perspective. Just real quick, a sponsor of this show and the charts, that's TradeStation, born to trade. Chart, analyze, customize, all in one platform. And Triple D, are you sitting down? Because I have an announcement to make.
Oh, no. What?
The announcement is that I'm trying to integrate TradeStation indicators into ChatGPT. And
you're working with TradeStation on this?
I'm working with Jeff Bish. I'm going to be working with TradeStation.
Good.
And I am telling you, I am flabbergasted. I am such an AI fan, man. I cannot believe what this TradeStation and what ChatGPT can do. It's blowing me away. I know I'm a little bit.
Why don't you try Gemini? Maybe we should try Gemini.
Oh man, Dennis,
you're already down the ChatGPT rabbit hole. There's going to be some incredible stuff, and I had some really good conversations yesterday with my friend Andrew. I was in Toronto. My daughter played a hockey game, scored a nice goal, by the way. But met with the friends, some friends there, and I won't say where he works, but he was just talking. He works for an AI company though, and he was just talking about AI jobs. And he's of the belief that AI is not going to displace the blue collar worker. It's going to displace the educated worker. And I'm like, holy crap. He's like, you're going to see a lot of jobs lost that are well-educated people, because these jobs, you know, like you think about like graphic designers, you think about like, you know, English majors, you know, who people are writing stuff. You think about like, these are not uneducated jobs. So like I've often said, even on this show, oh, the blue collar jobs are going to be displaced. He says, I don't think so. I think it's actually the educated jobs that are going to get displaced. I'm like, well, there's a scary freaking thought. You know, if you start thinking about all of the displacement that could actually happen from, you know, chatbots on educated jobs, I mean, there is a lot of technical jobs out there that ChatGPT can and Gemini could probably do. So I don't know where this world is going. I don't know what it means for the stock market. It does mean AI is going, it's, you know, you can't put the genie back in the bottle. We can't say, okay,
No,
we
you
screwed
can't.
up.
You
You know,
can't.
AI is going to do a lot of damage here. You know, Skynet, whatever. You know, you can't. It's not going back in the bottle. So you got to embrace it. It's there. But there is going to be job changes so much. You know, there are going to be certain jobs lost that'll be like, wow, I didn't consider that. So don't think about the blue collar jobs as much as maybe some of these educated jobs here, Joel, which is scary. I mean, it just does so many things. Just like you're blown away at what it can do with the trade station. You're gonna get blown away with what it can do with everything. I mean, there's a certain point in time where it's doing a lot of jobs humans do.
Well, Jeff Bish, he's the one that's been helping me with the trade station and the chat GPT. And we were going, you know, at first he was asking me how much I used it. And I'm like, I don't use it. I'm for creative thinking. And he's like, he will not work with people in his company that are not incorporating AI and chat GPT. He will not work with them. I hope some of these people aren't listening. But he said AI is not going to take your job. It's the people that are learning AI and that are learning how to use it efficiently are they going to take your job.
But there's going to be less jobs. There's got to be like, I'm fully convinced. You can argue with me in the chat, but there is the media, and everybody freaking lies to you, like on, you know, like everything you hear is a lie. You know, like it's like the CPI. I mean, you know, the CPI, oh yeah, we don't have any inflation, but they don't even include housing prices. They do this rent equivalent where they call up landlords and what do you think you can rent your house for? And this is the biggest price CPI. It's all just BS. I mean, the BLS is BS. It's what it is. Bunch of BS.
All right. What other catalyst? Can I do another catalyst? Nah, that was a fun rant, man. I didn't even
I'm just getting started. So I didn't even want to go. This is hold this chart. We're going to go here. This is going next because it's a good point you're making here. So we wanted to talk that too. But I'm just trying to say that everything that you hear from media, everything you hear from the government, it's all BS, folks. It's all just trying to like make it seem like it's good. They don't want to hear doom and gloom. You know, people are in the chat getting mad. They don't want to hear that I might lose my job. Nobody wants to hear that. The government's job is to make you feel better about your life. But you know what? On this show, we're realists, folks. We're going to tell you how it really is until the government comes in and shuts us down because we're saying the CPI stats are all made up BS because jobs are like, oh, well, we won't include the people who stop looking for jobs now. You know, and that's what it is. You know, if you look at the stats, if you give up looking for a job, now you're not all of a sudden included in that data figures. So, I mean, it's all made to look better than it really is. Is the world coming to an end? No. Is the world still a good place to be? Sure it is. Sure it is. But are they feeding us a bunch of crap all the time to try to make us feel better about our lives? Absolutely. So that's just where, you know, the bottom line. But go back to the Japanese yen story here. Go back to the Japanese bonds if you want to talk that, if you've got all the details. Because it's an issue too. It's an issue too.
Oh no, the yen carry trade. Oh no.
That's back. 2 years ago, this was crashing the markets.
Yes.
You know, all of a sudden, same thing.
Yeah. Yeah. Yen rises as investors bet on a December hike coming out of the BOJ while we're lowering rates. So the dollar's taking a hit on this, going in opposite directions. Is it the yen carry trade saga 0.2 along with the crypto crash? I don't know. But what we do know is that these factors are affecting the market today. So if you're looking for a catalyst besides the Bitcoin, it's that Bank of Japan, and I did not timestamp when that announcement came out.
Yeah.
But if the crypto already got us going, and then you get that announcement, so you want catalyst, you want to know someone that says, "Why is the market down in pre-market today?" You getting it here. Those are the reasons.
It's not, none of this helps. And then this comes back, the Japanese carry trade. Then all of a sudden, you start seeing liquidation of assets here because people borrowing in cheap Japanese yen, they start getting hit on the currency side of it. Now it doesn't look as attractive, or you start losing money on that side of it, and that's not good either. So lots of things to worry about. We
On
can
a
sit here
Monday.
and we just fed you 26 minutes of worry, and they want to be done with the doom and glooms. People are getting really upset with us here because they want us to feed you now like the government would feed us. It's going to be okay. You know what? It probably is, because the stock market, folks, if you're in the stock market, is linked to the government BS. So you know what? We can say, oh, it's all BS, but the stock market is linked to the government BS. It doesn't think CPI is fake. It doesn't think, the government is lying to us. It believes it all. It believes everything. So if you're just tied to the stock market, you love the BS. The whole entire stock market is built on BS. So that's the good news. So if the BS train continues coming from the government, well, the stock market's going to continue and eventually make new all-time highs again. So what do? We stay long the stock market because it's our only way to participate in the government BS.
Do we want to talk about Black Friday?
Sure.
Okay.
They had great sales.
Yes, but what the stocks are doing, and this could be the old another. I'm setting you up for another rant about a run into an event, and then what happens after the event.
Yeah.
Black Friday 225 results show a strong increase in online spending, which hit a record 11.8 billion. Overall, retail sales declined 4.1 compared to the previous year. But consumers used AI-powered tools to find deals and navigate this shopping season with lighter budgets. So there you go. Fact that now you think the
bring
stock
up that XRT.
Yep.
And we do very simplistic. I am the most simplistic trader on the planet, I think. I am because I'm not that smart. I just kind of take simplicity and I try to make it simple. What is my major core number one strategy?
Catalyst.
You guys have been listening to us for more than 2 years. My number one core strategy, really, it's catalyst trading. It's buying ahead of events and then selling right on the event, or selling it just slightly before the event starts. And what did we have last week? We had Black Friday. Well, what happened with XRT? XRT last week starts at $77, and then it goes to 80, and then it goes to 83, and then it goes to 84. And now it's stalling out. Why is XRT? Technicians scratching their head. Well, I don't know why it's slowing down here. The chart doesn't look, like I don't know. No! It ran up 5 days on Black Friday. That's what builds charts. It's people like me. I buy ahead of the catalyst too. I build charts. I'm a chart builder. I make the charts happen because I'm a catalyst trader. There's other traders like me buying ahead of the thing. And then, you dump it all on the Friday. And now you're like, now it's probably like catalyst exhaustion happens here. So is that good for the XRT? Hell no. So we had a nice bounce back. XRT was up almost 10% last week.
Wow.
Catalyst trading works, folks. Keep it simple. Be long stocks ahead of events. That works. That's what works.
Additional comments. MasterCard spending plus more comprehensive gauge put in the aggregate percent of 4.1, online up 10.4. So there's your cat. Just make sure with these stocks, if you're still on the XRT train or Macy's or Kohl's or these stocks, keep an eye on the close. Keep an eye on Friday's high. Make sure you get follow through for that. How many people over this Black Friday weekend saw a movie, right? Catalyst, movies, right? Everyone, good box office. Zootopia opened with 556 million worldwide over the 5-day window.
Zootopia again? Didn't they already have Zootopia? Can't they come up with something new?
It's Zootopia 2.
It's Zootopia 2. Okay.
Yes.
I was like,
yes.
the Zootopia 3 and 4 and 10. You know, that's how they go because we just come up with a good
Wicked,
idea.
Yep. I actually saw Wicked for Good. Hey, if you saw,
was it good? Was Wicked good or Wicked for bad?
Well, it was Wicked for Good. There was only one thing about it. There was a lot of singing in it.
Too much singing.
And
the musical, Joel. What do you expect?
I know.
Too much singing in this musical. I need less singing in my musicals.
Yeah, and it was the theater was pretty packed. I don't know if it's having a material impact. Cinemark, well, no run up into that. That's trading up. Down, that's flat. And IMAX, that's that had a nice run. IMAX, I guess a lot of people. I think I was in an IMAX theater. AMC, that even had what a run that had last week, from under $2 to $2.30. So
retail generated as well too. Retail stock, like I mean, you know, like you go to the movies, you go out do your Black Friday shop, and you do some movies, kind of. And then the weekend, it was good. Yeah, came back a little bit. It's nice. It's nice, very nice.
Yeah, only one bad thing about the weekend. Really bad thing.
Oh, don't even talk. You can't talk sports.
Okay.
Don't even talk. I felt bad for you, actually. I actually did. I saw Ryan Dietrich tweeting up a storm, and I really felt bad.
We'll
Ryan might get banned from the show for all those tweets, eh?
Yeah, Dennis, you know me too.
I read your mind. He's like, I don't know, man. We might have to ban the stat. Mark Chaikin, Ryan. We love Ryan Dietrich. We've never been. Holy crap. Joel, you had to be cringing on some of those Ohio State positive tweets.
Oh, my God. Okay, so a couple things here. I was very conciliatory when he was on, and I told him I was expecting an ass kicking, right? And I did for the exact reasons I told him of the NFL players and everything. And then I know he didn't make it personal. I know he wasn't personally attacking me on it. But what I think is that he could still come on the show. I just won't be on with him anymore. I hope he's not listening.
Joel's like, this Ohio, I can't take this.
He just kept on going.
You're scared.
I hardly look at my Twitter. I'm like, he just kept going and going.
He was tweeting up a storm.
I wonder.
Joel's blocked.
No, I didn't block him. I'm just like, holy mackerel, man. I'm like, that.
We love you, Ryan.
Oh, man.
He is on the opposite side of you there, though, Joel. Holy
mackerel. Man. You know what? Yeah. And you know what I'm going to delete right now?
Is the best guest. He, like you are.
I know. I can't do it. I know. It'll be a big
argument. That man comes with so much stuff. Mark is awesome too. But
maybe can we just change it to Bratman?
Bratman. We're definitely clipping this and sending this segment to Ryan here.
No.
Ryan, we love you. You are always welcome whenever you want on pre-market prep. But holy cow, you got under Joel's skin with all those Ohio State tweets this week.
All right. I hope Brent's not listening on his way to the airport because we're not following the script, Dennis. We're not following.
Did we have a script?
Yeah.
Do we have a script? I never knew we had a script before. Where do I find this script? This would make my show so much easier if I could just read the show. Just read the transcript. Don't go off script, Eddie. Okay, I'm reading now, and now leave. I was like, yeah, that would be good.
Okay.
No, I didn't know we had a script. Sorry.
Okay. All right. I think it's been a little bit too much of us, and you guys have been clamoring for Mark Chaikin to come on the show. He just great in the STN room, gives us a lot of great information. But you know what? We're bringing him over to pre-market prep because Mark has some traveling. So with no further ado. Mark Chaikin, Chaikin Analytics, joining us here live on Pre-Market Prep. Mark, we're not behaving today.
Uh-oh, what's wrong? It's got to be Dennis. It's not you. You always
It's
behave.
me. It's usually me. Mark, blame me. Blame me for this market sell-off. You can blame me too here. I didn't buy any Bitcoin on the weekend. I didn't hold up crypto, and crypto cratered, and it brought the whole stock market down here Sunday night. And I'm going to blame myself, because if I could have came in and bought some of that Bitcoin, maybe I could have stopped it, but I wasn't good enough to go in there and get long Bitcoin. So you might as well blame me for the market sell-off.
Well, it might have been China's industrial decline that
Or the Japanese carry
contributed
trade.
to it.
Or
Yeah.
we're hearing about the Japanese carry trade once again here. We're hearing about a few things. So I want to get your overall thoughts here, Mark, because it's been an interesting month. I mean, November was really ugly off the bat. We bounced back nicely in the last week or two here. And now that the dust has settled, I mean, we've kind of, painted kind of a gloomy picture, but then, at the same time, like, the markets aren't far from all-time highs. So what's Mark Chaikin think about these markets?
Well, I'm in buy the dip mode. So this morning's weakness is, I think, a gift. And I think what the last month has been all about is the Fed funds futures markets. You went from a 30% chance of a rate cut on November 12th or 17th to a 90% chance of a rate cut in December as we ended the month. And that pretty much says it all. The market wanted a rate cut. The equity markets, the bond market said, yep, it's coming. And you got a big rally off support. And that's the thing. You got a rally off support. You came back and tested in the S&P, and then you just took off. So I think you got to be buying the dips here for a year-end rally. I think it's going to be a big one.
Because we got a lot of momentum stocks that are broken here, but the value stocks look great. I mean, it's kind of a tale of two markets.
I don't know what you mean by value these days, because everything is modeled with, with construction and engineering being in the lead because of data center builds and so forth. You certainly don't want to be messing with the quantum stocks or anything like that. But there's a clear-cut group of attractive buy candidates. The construction and engineering stocks we've been talking about night and day on here. NXT, VRT fall into that category. Biotech, incredibly strong. And again, we've been talking about that for quite a while. And then some of the selected chip stocks. So, the smaller chip companies. I'd love to buy Micron on a 10% pullback. Don't think you're going to get it, but I think the data center build theme is going to continue, and that includes connector companies like Amphenol and Fabrinet. There's so much to like in this market right now. What do you mean by value, Dennis? That's a question I should have asked right
I just think
that.
like one, you said healthcare. I mean, you were talking biotech. I mean, healthcare has been, you want to take it further and look at the XLV. I mean, there has been just a monster rally for 3 months now. I mean, you've got, PEs on the XLV trading 9-10 times. Bristol Myers, you can go further than that. But I mean, there's so many stocks that are trading with really low multiples. So I've been talking in the last month and a half is like lower PE stocks have actually carried this market in the last 6 weeks. So it's been kind of rotation out of like nosebleed 100 times earnings stocks and looking at like, hey, maybe it's not the same. And I mean, Berkshire Hathaway, which is full of low PE stocks, has quietly just had a 10% rally in 3 weeks.
Yeah.
So
Isn't that amazing?
Yeah. So I mean, it has kind of carried us. I mean, the S&Ps tell a completely different story. If you look at SPY compared to, and obviously, like a Nebius or something that's off significantly. There's been, definitely the tale of two markets in November where values kind of picked up the slack for the most part of where before that it was all momentum. I mean, we were in the momentum names and everything was working. I do want to ask you too, Mark, is what about this Google versus NVIDIA thing? I want to get your thoughts here too. This whole like last week, NVIDIA selling off and oh my gosh, Google's going to give them competition and Google's now, got a better alternative for Meta here. Are you concerned about, Google's place here? Like that all of a sudden, maybe TPUs are cooler than GPUs? Like is NVIDIA, what are your thoughts on NVIDIA here?
Well, I think NVIDIA is your plow horse for this AI boom. I'm not at all concerned.
Okay.
Google announced a new version of Gemini. Good for them. It's supposed to be fabulous. And they said that it was built on their own chips, which caused the sell-off in NVIDIA. But then I guess it was Tuesday last week, um, Jensen Yang came out and said, Google's chip is at least one generation behind us. So, you're going to get this back and forth. You got it when AMD announced a chip and so forth. But, I'm not, NVIDIA is not my favorite chip play right now. I'm more interested in something like a Qualcomm or an AMD on a pullback. But Google is my favorite Mag 7 stock, has been for the last 6 months. It's in two of our portfolios. It's in our AI newsletter portfolio and in my partner Pete Carmasino's quarterly portfolio. So I think Google is doing everything right. I cut the cord. Well, I cut the cord a long time ago, but I switched off Hulu and I started using YouTube. And lo and behold, YouTube is like a rocket ship compared to Hulu. So Google's got a lot of irons in the fire, not just the chips, not just the large learning model, but you got advertising, you got search, and you have YouTube, which I got to tell you is the best streaming experience I've had in 5 years.
We're on the line with Mark Chaikin, Chaikin Analytics, a veteran of Wall Street, working on the desk, working on the analytics. Mark, let's go back to the data center trade. And here's a stock that cannot possibly have a positive power gauge rating. But here's the stock that comes out and says we're going to make $30 billion. We're building these AI centers. To take the other side here. Is this are we overdoing it are we overbuilding? Are we saying we're going to build, we're not going to build? I mean, are we worried
which
about
stock
the
are you
these companies are going to take on?
Give us the symbol, babe. Give us the symbol, baby.
Oracle.
No, I thought it was that crazy one, the wave stock.
What stock?
What's the one that's building the big data centers? Oracle actually has a bearish power gauge rating. It shifted from bullish to bearish in early November with the stock at around 240. God bless Larry Ellison. He's a very wealthy man. I think there's some distractions there with his son, messing around in the broadcast and media business, and that's going to require a fair amount of money and a little bit of a distraction. But I think people got carried away with Oracle. We'll see where it plays out.
It went nuts. Obviously, it's come back to reality here. But I mean, it's just telling it. Oracle does tell a good tale, along with like CoreWeave. There's so many of these.
CoreWeave is the one I would really avoid.
Sorry, Mark.
Yeah, what's the symbol there?
CRWV.
I always mess it up too. CRWV.
RWV. Yeah, we don't have a rating because we don't have 12 months of trading yet. But boy, there is a stock that is the poster child for everything that's wrong with circular deals in this chip space and data center space. We've talked about this. They announced a deal on September 7th with NVIDIA, a $6 or $7 billion chip purchase. But there was a put with that purchase where CoreWeave has the ability to put the chips back to NVIDIA if there's no demand for them. But there are a lot of deals like that going around, and there's a lot of debt being generated, and I think that's dangerous.
The circular deals is a conversation, Mark, that is concerning to a lot of investors here. I mean, OpenAI might be the king of circular deals here. I mean, they're going to send, money here, and now Microsoft, now we're going to go back over here, and they're going to invest here. And there's arguments out there. People are arguing that it's the same money just going in a big circle here. And is there really, the value really there when they're just passing the money back and forth and saying they've got the sales? I mean, there's
Well,
an argument against the entire thing is circular
well,
deals.
well,
Thoughts
that's
there?
what the latest sell-off was all about.
Yeah.
And, suddenly the market said, okay, enough of that. Let's get on with the bull market. But yeah, I mean, there's a risk there.
What drives the next bull market? So if we don't have OpenAI circular deals or Anthropic circular deals driving the next bus, what's the next driver? Thoughts?
Well, you actually keyed in on it when you talked about value stocks. It's earnings. Fourth quarter earnings are going to be fabulous. And so you're going to have a January earnings season that's going to be really good for the market. And, this market has been driven by earnings. The momentum stocks are in a league of their own, but you have a lot of good things going on. Energy, we didn't talk about energy.
Yeah,
but
someone just asked about it. Give us some energy.
Halliburton's our favorite name. We recommended it about a month ago. Valero has been in our smart money portfolio for 3 or 4 months. It's starting to perk up a little bit. So energy and pharmaceuticals, biotech, if you want to get away from the momentum stocks, are fertile ground. Look at a stock called BBIO, Bridge Bio. It's just a gorgeous chart. Do I want to buy it here? No, but I want to buy a pullback. And it's had a bullish rating since end of May when the stock was around 35. It's got a lot of things going for it in the pipeline in terms of, they don't have any earnings, but most good biotech stocks outside of Amgen and Biogen and Gilead don't. And by the way, Gilead, if you want a solid performer, that stock has been on a little bit of a tilt to the upside for a year now.
Yeah.
And so there's plenty outside of tech, but I still think tech has a lot left in it. Another biotech stock, INCY, Insight, is a stock we recommended about, I guess, 8 weeks ago, down around 85, had a nice run up to about 108 and pulling back a little bit. There's so much to like here that focusing on, what could go wrong in AI, I think is a mistake.
Of the
but a lot of these stocks you're talking about aren't AI stocks. So
no, well, that's what I mean.
That,
yeah, but there's two. Yeah. It's a tale of two markets, then, Dennis.
Yes. Yeah, and that's why I've been talking about moving, and my whole portfolio has been AI generated here, but I'm trying to put non-AI stuff in here now because, hey, there's a real economy, real stocks, and real earnings out there, and some of these companies aren't anything to do with AI. I mean, XBI in itself, you can say, oh, yeah, there's AI involvement here, but I mean, XBI has been unbelievable. I mean, the biotechs, like you were saying, not just the big ones, the little ones, like $85 to 123, it's straight up in a straight line. So there's definitely some bullish, I feel like the market's completely turned, that they're kind of moved away from some of these momentum AI trades and are moving straight on into real economy stocks that have been left for dead.
I'm with you on that, with one caveat. I want to have some tech in my portfolio. Now, AMD has come down here from 260 all the way down to 200. I think AMD is a buy here.
Hard to get bet against Lisa Sue.
Got a bullish power gauge rating. You still haven't filled that gap from the October announcement about new chips. But I think, instead of NVIDIA as a core portfolio holding in tech, for me, it would be AMD and Qualcomm, although Qualcomm's not quite as sure a bet. It does have a bullish power gauge rating, and you had that huge spike up back in October when they announced some new AI type chip. But AMD to me is now the blue chip in the AI chip race.
One biotech that has not been participating is mRNA, and one of our chat members, Fabian Flores Jasso 4057, wants to know about Moderna. mRNA.
Well, it's got a really long base. If it ever breaks out, it'll do something wonderful. I wonder if this isn't a function of RFK Jr. in Washington saying vaccines are bad. because
Yes.
this is a vaccine company.
Yes.
It has a bullish
Bingo.
power gauge rating, but it's been underperforming the market. And probably if and when you get a new administration in Washington, the stock will perk up again. But right now, it looks like dead money to me.
What do you think
I
the
think-
over-under on Kennedy remaining in the administration?
Oh, I don't make political judgments.
Okay.
On the
All right.
Smart.
I do it at the Thanksgiving table.
Oh,
Yeah,
man.
not in front of 5,000 people. It's smart to stay out of
Now,
politics.
hey, 5,000 is great. Congratulations, guys. I love that.
Mark Chaikin, Chaikin Analytics, a veteran of Wall Street. We haven't got any death stories from you. Maybe we'll save that for next time. If you like to hear more from Mark and more about Chaikin Analytics and all the tools he uses to make these fantastic calls, and you got to join the Stock Trader Network. Mark comes on every Wednesday at 10 o'clock and gives us a more detailed look at his picks and the fundamental and technical reasons behind them. So, Mark, once again, thank you. I know you got a busy week. We'll be chatting with you again soon.
Loved it. Good luck, guys. And to everybody who doesn't see us before, have a great holiday season. But come on to Stock Trader Network. That's where the action really is.
All right. Thank you.
Thanks, Mark. Appreciate it.
All right. Let's go on.
He likes value names too. So he likes the AI stuff too. So he likes a balance, the barbell approach, a little bit of both, I think, is where Mark was. And I think I'm kind of the same way. I like that he likes AMD. That's still my biggest holding in my long-term portfolio. But I just keep thinking, like, on dips, I'm actually been adding value. I'm like, I don't know, man. I'm like, do I want to pay 100 times earnings on some of these stuff? And I'm scared. I'm really scared that OpenAI isn't popping stocks anymore. I'm really scared not popping on Anthropic anymore. I'm really scared about that kind of thing. So I just think, this has turned into a value market. I've seen times and periods where value stocks pick it up. And people say, today, oh, I'm very bearish and very doom and gloom. Not at all. I'm just saying I think there's a point in time where when stocks are trading 6, 7, 8 times earnings, at a certain point, they start to come back into favor. And are we back in the Warren Buffett market? I think you can argue we are. I mean, General Motors is unbelievable. Look at GM. 6 times earnings. I argue the company should go private at $49. It's $73.
I'm buying another 100 shares every time you say that.
You keep buying. Joel just keeps backing up and buy another 100 shares. But that's the market that we've been in for 3 months. So it isn't like we've been in the value trade for 3 days. We've been in the value trade for 3 months, folks, now. It's been a couple of months here. Like value stocks outperforming. XLV, Burke.B, stocks like General Motors. Low PE is cool again. We're going to continue to say it. Why do we continue to repeat ourselves? We repeat ourselves when stuff is working. We have to keep saying it to ourselves so we do the right things. So when we're buying stocks on dips, I'm not looking so much as like, oh, I'm going to buy the Bitcoin dip and make millions here. I'm like, I want to buy what's trending higher on dips. And what's trending higher on dips right now is value stocks. So that's where I'm at.
It was a value stock that got killed because they were buying Kenvue and made a little bit.
We like this.
Yeah, we did.
We both did $100.
I don't know how many people in the SDN room bought this at like 100, 100, 101, 100. Just like, hey, buy it, forget it.
It's the cheapest Kimberly Clark's been in years.
Mm-hmm.
Cheapest it's been in years. They got bought Tylenol. Now, Tylenol. Like, I don't know. My doctor actually just told me take Tylenol when I wasn't feeling good.
You should listen to your doctor. I mean, I don't know if we're gonna have to bring in a Lisa consult here soon if you don't get better.
I'm feeling a bit. You can tell I'm a little bit more active. I'm coming. It's COVID part 25. What are you supposed to do?
Oh, you keep blaming COVID.
Average COVID.
Get a COVID shot.
I'm gonna stop it.
Oh no, you would just rather be sick for 3 weeks in a row and complain every day on the show. I'm gonna come up there and I'm gonna put you in a headlock and I'm gonna put you in a headlock. And then Lisa's gonna give you the thing, and then I won't have to hear you complain anymore about how sick you are. That's what I'm gonna do. Oh my God.
I'm not complaining. This is not a complaining day. This is just
no, it's not. You're doing great. You're doing great. I mean, Kimberly Clark, I mean, that has a product, we're going to be using for a long time. So we all know about that. All right. We have 5 minutes left in our regularly scheduled programming here. And just before we're going to do a little earnings preview, because there's some big stocks this week.
There is.
Powell speaking at 8 o'clock tonight at the George Shultz Hoover Institute policy event at Stanford University. This is the last time he's speaking before his next.
When is he gone? Do we have a date?
It's tonight.
No.
Oh, the next Fed meeting?
Out? When is he out? Do we know? Does anybody know? When is Powell officially out? Because we know Trump has said he has the next Fed chair. It's Hassett. Kind of know who it is. Looks like that's who it's gonna be.
Yeah. He said he knows. That was part of my macro that I wanted to get at the top of the show, but that I forgot.
May.
Yeah, he
Our
knows.
chat is so smart. No, somebody said March, but May. We got 4 votes for May. May 26th. I got the actual date. Our chat's smart. That's why we do the show. We got you guys, and then you guys tell us, and we know. So this is good. Chat. May 26th. It's a long ways away yet. You can try to kick him out before that. He's dead trying to kick him out. He tried to do that. He's dead. He doesn't want to go there. So next, all we can promise you is the next Fed chair is going to be a dove of all doves, the dovish of dovishness, and rates are going down no matter what. It won't matter what the data, needs to be cooked anyways, but it won't matter what the data comes out. Rates are going down. So, which is going to help the economy in the second half. So there's a lot of reasons to be bullish, real stocks with real money and earnings, like Mark Chaikin said. Why? Well, if rates go down, these are the stocks that are most sensitive to interest rates. And if rates are indeed going to be a lot lower at the end of 2026, that's not a bad thing for the stock market either. So despite everybody saying I'm bearish here, quite contrary here, I think I'm just bullish different stocks than you. So when I talk negative about Bitcoin or negative about something, people construe that as bearishness. There's a lot of stocks looking really good in this market right now.
All right, we're going to get some AI stocks with earnings this week, and what day? Mr. Benioff, he's going to have to put up or shut up. That's on Wednesday. You want to take a look at the CRM chart?
Yeah. I mean, Salesforce.com, who Benioff has obviously said he is the ultimate AI company. We've got, paying Matthew McConaughey millions of dollars to pump that into her brains all the time. It's put up or shut up for Benioff here. This is it. I mean, CRM is right near the lows. CRM is down from $369 back a year ago. It's $230. And I'm going to say this is like a very important quarter for CRM. They better show it because he is clinging on major support. And if CRM disappoints, this stock could be under $200. So, I mean, it's very important that CRM does not disappoint because I see an ugly head and shoulders. I see no participation in the recent AI rally. I see a stock that's got a cheaper multiple, than the others, but it's cheaper for a reason, is because a lot of people, believe that Salesforce is getting disrupted by AI. So trading at 33 times current earnings, 18 on a forward basis, is as cheap as CRM's been in a long time. Is it cheap for a reason? Well, we're going to find out on Wednesday. So stay tuned, folks, here, because I would say that's the most important report of the week. But it's not just that report here, Joel. Tonight we get MongoDB. Tuesday we get CrowdStrike. Everybody watching that one. Okta, Marvell. Marvell's been in play a little bit apparently lately. We get Asana, whose CEO buys more of his shares every week. Nobody's bets harder on his own company than Moskovich. Snowflake on Wednesday. GameStop on Wednesday. What's happening at GameStop? UiPath is another one. That was an old Kathy favorite. AI on Wednesday. Thursday, pile of names. DocuSign, the old Sentinel one there. RBRK, Rebrick, ULTA, Stitch Fix, well, I don't know because of that. HPE, Build-A-Bear. We even get bears building. Are people building bears still? The kids building bears. We're going to find out on Thursday. So it's going to be a pretty cool earnings week here. So despite the end of earnings season already happening here, we have more earnings stocks, and we got lots to talk about, and we're going to go do over that over at Stock Trader Network. I think one thing we did not do, though, is we didn't do the Hive.
We do. I did. Oh, boy. So
bring it up. We're going to bring up the banner because Brentster always does this. Brentster is away here, so we got to get this. Do you have the script?
I do have the script. I do.
Bring the chart up so we can look at Hive. And obviously, it wasn't a great day for crypto, folks. So I know Hive has been struggling with the Bitcoin sell-off recently, but we still love Frank Holmes. We still love Hive Blockchain, obviously, for sponsoring the show and everything they've done to help us. So let's show the chart.
Hive sponsorship. This show is brought to you by Hive Digital Technologies, a global leader in grid-powered data centers for Bitcoin mining, high-performance computing, and AI. Operating with nearly 0.5 gigawatt of renewable energy, Hive is on track to capture 3% of the world's Bitcoin production by the end of 2025. Scan the QR code on the screen or visit the link in the description to learn more. Had a fantastic talk with Craig DeFerris, a pre-interview call with Craig to talk about. He actually explained TPU versus GPU to me, Dennis. Yes. So
when are we going to hear that?
It's on the schedule here. Do I have the schedule up? Let me see if I can find the schedule.
So we're going to find out TPUs versus GPUs.
Yep. It just man, this guy has so many interesting things to share with us.
Who is this? This is from Hive. Who is it at Hive?
It is. His name is Craig Tavares, and he is the president CEO of Buzz, which is their their AI and their high performance computing sector or division of Hive Digital. Tomorrow, just a quick look here. Tomorrow, Joel Kalina is going to be joining us from Wedbush Securities. Wednesday, Chris Bretcher, who's been helping us out in the STN room, as
Chris
I mentioned.
Is in there today too, I believe, in the STN room.
Yep, and we have him, and then we have Hive with Craig Tavares, and then we'll bring back Tony Pollock. Tony's going to be on the 5th, and Tony's going to be doing the RLT takeover. When all three of us are out, but that's next week. That's a long ways away, folks. Thanks for joining us on Pre-Market Prep. We're gonna go and attack this market on the Stock Trader Network. If you haven't signed up or done a free trial, PMP STN think tank, a lot of great minds over there analyzing the markets. Thanks for joining us on Pre-Market Prep.